about the BBBEE amendments that were published in March for response by the end of May, and then were also promulgated. A component of these amendments were promulgated about a month ago, and those were the Youth Employment Service regulations, which were promulgated as a Department of Trade and Industries practice note. It's great to have everybody on board, and please, if I can just remind you, I see everybody has muted their microphones, which is fantastic. If you do want to speak, just please unmute your microphone, and that will indicate to me that you want to be speaking, and with pleasure. So again, welcome. This is the webinar of the Corrisa Trade Association to its member companies, and the title of the webinar is the BBBEE amendments. Specifically, we're looking at the YES amendments, which are the first to have been promulgated by the Department of Trade and Industries. I do want to specify, I do want to be very specific, that this is not scorecard number 3. So we are not talking here about the fact that there were scorecards from 2003 and then again in 2013 against which the generic set of companies in South Africa would be measured. It is also not a directive which will change until promulgated any of the charters, scorecards which have been created by specific industries. So there are a number of industries that don't subject themselves to the generic scorecard, the generic broad-based Black Economic Empowerment Scorecard promulgated by the Department of Trade and Industries, but in fact take those and make them their own, make them special, and apply them to their own sector of industries with the agreement of the Department of Trade and Industries. So without any further ado, I want to welcome everybody who's joined us, and I want to commence with the presentation. Right. So we're talking about the broad-based Black Economic Empowerment Amendments, which have been promulgated for 2018. They were promulgated in April. The comments, the opening for comment was closed by the end of May, and from the middle of September, we had the first component of those amendments promulgated, which were in fact the amendments relating to the Youth Employment Service. So if you consider that there have been many gray and confusing areas in relation to broad-based Black economic empowerment since the publication of the first scorecard in 2003, and then compounding the ambiguity with the publication of the second scorecard in 2013, these latest amendments in 2018 clarify a number of issues, and they also create a number of opportunities for companies to participate and benefit, I suppose, in a non-linear fashion. I'm going to handle the YES component of these regulations in a second part of today's presentation, but basically YES is the Youth Employment Service. It is a YES employee is a fixed-term contract employee. They're contracted for 12 months. They're contracted at the same total cost to company as a permanent employee would be. They have a standard job description in the company at that level in the company for that job. And by the way, it's mostly going to apply to entry-level positions in companies and any existing job in the company. It's identical in terms of basic conditions of employment application. We'll talk about that when we do the YES component. And there's no expectation of gainful employment at the end of the 12-month period. That's the big advantage of the Youth Employment Service. But what I want to do is I want to move to the second component of the proposed amendments, and that is the skills development element and how that is intended to evolve. The amendment is directed towards qualifying and clarifying many issues to do with the skills development element of broad-based Black economic empowerment. Now, what you have to know is that at the moment, because this component of the amendment hasn't been promulgated or made into law yet. So as things stand at the moment, a company that wants to get its BBBEE points as high as it can, its scorecard rating as high as it can, as it can, would need to score maximum points on skills development, which is the third element. There are 5 elements that a company is measured against for its BBBEE verification. The third element is the skills development element. Now, that element has been particularly tackled by the new BBBEE amendment proposals. At the moment, a company has to pay its 1% of payroll as a skills levy. It pays that to SARS, and 80% of that money goes to a CETA. But for that company to obtain BBBEE points, it has to take that 1% and multiply it by another 500%. So if your annual skills levy is 100,000 Rand, for argument's sake, let's just say 1,000 Rand. For you to get BBBEE recognition of your skills development spend, you actually have to be spending 6,000 Rand, or 500% more than your skills development levy, so that together it equals 600%, or 6% of payroll. So you have to be spending 6% of payroll to get your full skills development component of your BBBEE points on your scorecard. The new regulation says this, that we are going to take the 6% of payroll, which is what's included in the scorecard up until now. In fact, it's currently still alive because this part hasn't been promulgated yet. And everything that you're spending that 6% on, we're going to reduce to 3.5% of payroll. So that we're going to reduce your existing skills development expenditure range of opportunities from 6% down to 3.5%. Now, on the face of it, that sounds absolutely fantastic. It actually means that companies will believe that their 6% of payroll requirement for BBBEE purposes is being reduced down to 3.5%. But in fact, what they're doing is they're squashing everything that is currently located in that 6% down to 3.5%. It remains unclear whether the 6% incorporates the 1% existing skills levy or not. The confusion prevails from the 2013 scorecard, where it was simply assumed to incorporate the 1% levy. Some charters, such as the Construction Charter Council, specifically make reference to the fact that the 1% is incorporated into the 6% target. The amendment continues to not make reference at all to the prevailing skills levy. So the assumption is that the 1% is included in the 6%. So that's where we start. To ensure that companies are not disadvantaged by this change when it comes to expenditure on in-company and unregulated training interventions, the percentage allowance for this kind of training categorized in the annexure in the amendments is in, so there is A, B, C, D, E, F, G. There are 7 categories of training you can spend your 6% on, which is now being reduced down to 3.5% of payroll. 7 categories. The last 2 of those categories, category F and G, has been increased from 15% of 6% of payroll, where you can spend that skills development money on non-regulated training. In other words, everything that Corrisa would do, for example, which is not accredited training, so such as, for example, the NACE training, where you can spend, at the moment, you can spend 15% of your 6% on something like NACE training. But in terms of the new amendments, you'll be able to spend 25% of the 3.5% on NACE training. But I must caution that that's not actually an increase. You're not being allowed to spend 10% more than what you can currently spend on NACE training because it falls into category F and G of the schedule of what you can spend on skills development training. You're not being allowed to increase that by 10% because it comes off of a smaller base now. No longer is it coming off of the 6% base. It's now coming off of the 3.5% base. So in effect, there'll be no change. Whereas the moment you can spend 15% of your skills expenditure on NACE training and still count it as BBBEE expenditure, In the new regulations, when they finally promulgated, you'll be able to spend 25%, but only of 3.5% of payroll. Before I go any further, are there any questions in this regard? Linda, I would imagine you've got some questions, bearing in mind that this is the arena you play in terms of NACE training. Feel free to unmute your microphone, anybody. But before I move off of this, I just want to make sure it's completely understood. Hendrik, anything from your side?
Oh, Ivo, everything is clear from my side.
Okay, because this is very, very important. I don't think, and I stand open to correction, but I don't think that Corrisa has actually communicated with its members that its expenditure on NACE training can actually be set off as 15% of its total skills development expenditure, or its 6% of payroll, can actually be set off as 15% of whatever that target is for skills development spend. I don't think that that's been properly communicated. I stand open to correction, and Linda, maybe you want to correct me if my assumption is wrong.
No, we haven't communicated it.
Yes, no, Hendrik's right, we haven't. I think what we should do is maybe draw up something that we can send out to them.
All right, so I'm just going to do this very quickly because I think it's actually worth just again illustrating to you what I mean in this regard. I'm just going to quickly do this, and I'm just going to quickly do this, so I can actually just quickly draw it up for you on the screen. What it means is this. I'm going to give you a practical example. If a company pays 10,000 Rand a year as its 6% of payroll. I'm just using ridiculously low numbers. 10,000 Rand a year as its 6% of payroll. Then 1,500 Rand. Well, what's 15%? No, it's more. What's 15% of 10,000? 10% is, it's 1,500 Rand. Then 1,500 Rand can be spent on categories F and G of skills expenditure. That's 15%. So 1,500 Rand or 15% can be spent on categories F and G of skills expenditure. Now, the important thing here is that categories F and G deal with unregulated internal training, which does not need to be SAQA accredited. So that's very, very important. If you consider, I'll give you a practical example. A company doing 140 million Rand a year turnover has a skills development target. We worked it out this morning, has a skills development target of 3.5 million Rand a year, which immediately means that 15% of 3.5 million Rand a year, I'm just quickly doing it, times 15% is 525,000 Rand, which immediately tells you that that company can spend 525,000 Rand out of its 3.5 million Rand target on NACE or SAQCC kind of training, which is not SAQA accredited. Any questions in this regard?
No.
Okay, so you're comfortable with where we are? Good, moving on.
Yes, I will.
All right, moving on. So, coming back to our discussion. So even though the regulation now pushes that up from 15% to 25%, it is pushed up off of a lower base. So the base is no longer 6%. It's now only essentially just over half of that. So in this instance, like, that company's target would no longer be 3.5 million, but really 1.5 million, or maybe 1.2 million. So it would be 25% of 1.2 million that they could spend on this kind of training, as opposed to 15% of 3.5 million. And it works out to basically the same. It works out to basically the same. So that's the first change. That's the first change, which is in fact now implied in the new regulations when they're promulgated. Not yet promulgated, so it's still 6% of payroll, not yet promulgated. But when it's promulgated, there will be this second element, 2.1.1.2, which is the introduction of a higher education spending target. Now, in response to the pressure from the fees must fall demonstrations on government, and also the perceived unwillingness of business to provide bursary sponsorship to institutions of higher education and training, the Department of Trade and Industry has now specifically taken the discretion away from businesses to spend on higher education and training, and instead has introduced and enforced 2.5% of payroll target on these products and services. I want to pause for a second and say this is a very, very important component, ladies and gentlemen, because what this says to you is this, that 2.5% of payroll, which originally would have been incorporated into the 6%, has now been ring-fenced in a new target, which is 2.1.1.2, and that 2.5% of payroll is only there for a company to fund essentially university education, higher education and training colleges, and university education. The implication, and the regulations haven't been published yet, but the implication initially was that it could only be spent in public higher education institutions, which was very dangerous, because what that meant was it could only be spent at public institutions, higher education universities owned by government, essentially, public institutions. However, we have it on very good authority that they're going to take that out once they promulgate the regulation finally, and it will be any accredited, any Council on Higher Education or CHE accredited institution of higher learning. A company will be able to spend that 2.5% of payroll on. Now, the danger of this is that companies will give this money to universities basically for any training, as long as it's for accredited training programs, where the companies will get the names and the ID numbers of the people benefiting from these bursaries. The opportunity for Corrisa is to say this, that the Corrisa Trade Association will survey its members, will determine their common higher education training needs for their new graduates and their new entrants, or as 18.1 for their existing employees. So let's say, for example, you've got a whole lot of bookkeepers amongst your member companies who do not have higher education qualifications. And let's say Corrisa manages to enter into an agreement with WITS and with UCT and with KwaZulu-Natal University that these bookkeepers who've had maybe more than 6 years of bookkeeping experience will be granted access into an undergraduate qualification for bookkeepers, or a chartered institute of management of accounting qualification, something like that. What you're in a position to do is you are in a position as Corrisa to then offer this as a group training program for your members, with one coordination point being Corrisa, where, for argument's sake, 15% of the cost of that investment will be used by Corrisa to administer the program, and the balance will be paid to the universities in the cities where the people are actually employed. So there is an opportunity to create a group training program to satisfy the 2.1.1.2 requirement, and it can cut across all of the needs of the company. So it can be, for example, professional secretaries. It can be professional administrators. It can be professional salespeople. It can be whatever you want it to be, wherever you find the degrees offered by universities or higher education institutions, private institutions and other institutions. If it is an HET institution registered with SAQA, accredited by the Council on Higher Education and Training, you can bring that into your Corrisa group training program under 2.1.1.2. And the benefit then is that you're entitled to earn administration income because you're administering it for your members as a group scheme. But whatever your members then put financially into that program will be counted as that 2.5% expenditure. And by the way, if you add the 3.5% of 2.1.1.1 and the 2.5% of 2.1.1.2, you get your original 6% of payroll. Before I go any further, this is a very, very important opportunity as well as change. Are there any questions or comments? Hendrik, what's your view on this? Is it something you think that Corrisa should be pursuing?
Yes, Ivo, definitely. Actually, it's very interesting. We'll have to have a look at it and see how we can go about it.
Maybe what we should be doing is that the first webinar in 2019 should be about, let's call it a needs analysis amongst your members for higher education training for their existing staff and for new appointees.
Yeah, we can do that. Yeah.
Do you want to do that?
Yeah, we can do that. We also have to get more people actually to go on meeting this thing, because I see a few people are there. So for next year, we had to make another plan of how we can get people to go online. Actually.
Absolutely. All right. So thank you for that. All right. So that's very important. That's 2.1.2. Now here comes the kicker. What they've also done, they've added 2.1.1.3. So they've taken the 6%, they've divided it into 3.5 and 2.5, but then they've added another 0.3% spend, where they are saying that 0.3% spend. And if you consider that the skills development levy, the 1% skills development levy at the moment, is worth 7 billion rand a year across the 21 seaters. That's 1%. If you times that by 5, that's another 35 billion. So that makes it 42 billion. 42 billion rand. And 0.3% of that 42 billion is roughly about another 300 million rand. And so what they're saying is that 0.3% must be spent on black disabled employees. It is included in the target on black people or is an additional target. There's no clarity on that, but one assumes that it's existing employees, and therefore that the new overall level of spending on skills is 6.3%, and that the target has been increased to 0.3%. Now that's very important. Again, it is an opportunity. It is an opportunity for Corrisa, because what it says to Corrisa is if there is a way of creating a relationship with an organization like, for example, QASA, which is Quadriplegic South Africa, where you're able to take people in wheelchairs and incubate them to go into your member companies in, let's call them non-physical positions. So either front of house or sales or marketing or administration, etc., where they don't need to be necessarily mobile. You're in a position then to place those people in your member companies, where your member companies should be looking to spend 0.3% of their payroll on the training of those people in the workplace. They can then get additional tax allowances and even subsidies for employing people with disability. And the suggestion is that this should be and could be coordinated by Corrisa, the Corrisa Trade Association, for its membership. In so doing, you're creating a value proposition and a value add around a very difficult area to administer if the company was trying to do it itself, which is the employment of people with disabilities. It's very, very difficult. Most companies don't do it. Most companies don't think they can do it. And so again, as a trade association, this is creating an immense opportunity for you to step in, add an absolutely valuable service to your members, and in the process, let it contribute to the sustainability of an organization like Corrisa. I know this takes you out of your comfort zone in terms of talking about people with disability, but what do you think about it as a potential opportunity, Hendrik? Do you think it, again, is something that Corrisa should be pursuing?
Definitely, Ivo.
The interesting thing is that you're creating a pool of people with disabilities for the workplace, and your company, your member companies, then have an opportunity to earn BBBEE points beyond just the skills development area, because they can earn points under management control. They can earn points even under procurement if it's done properly, and not just in terms of skills development spend. So while it seems an innocuous amount, 0.3% out of the total 6.3%, the implication is huge in terms of the opportunity. And that's, I think, the thing that we want to be focusing on as we move forward. Good. Thank you. Let's move on. So I've spoken about this already, which is the positioning of industry points, of industry associations, such as, for example, the Corrisa Trade Association. It sends a clear signal to companies and employer associations to gear up to ensure the proper management of higher education sponsorships in the best interest of their respective industries and sector, to align spending with opportunities, gaps, and vacancies, and to manage the process as shared services rather than on a company-to-company basis. Institutional agreements with higher education institutions classified and recognized as centers of excellence by the industry and the sector, in this case corrosion, are critical in the management of this target. And there will be a training tracking tool which is created to actually follow the individual from training through to job placement, through to continual professional recognition in the workplace. That's also intended to be created. The weighting points have been spread around to accommodate the extra 4 points required for the new higher education target. Skills expenditure weighting has decreased from 8 points to 6 points. So for the 3.5% of payroll, you'll now only get 8 points out of the total points for skills expenditure. And those 4 points have been attached now to higher education training. Apprenticeships and internships have gone down from 4 points to 3 points. So you can see how they've taken the fees must fall priorities, and they've placed it at the feet of companies and said to them, if you fund fees must fall, you can earn points. But if you don't fund fees must fall, you're not going to get the same points that you previously or currently still get on your 6% of payroll. It is important to note that whereas the new target 2.1.1.2 makes allowance for 2.5% of payroll on bursaries with higher education and training institutions, expenditure on all basic education and training institutions, in other words, up to school level, diploma level, etc., is incorporated into the first three, and also trades, by the way, trade training, is incorporated into the first 3.5% of payroll target. So it's not the total 6% anymore. So the amount of money that you can spend in your company on training your existing employees or new labor pools on non-higher education training qualifications has been reduced from the 6% down to 3.5%, so that you have to spend at least 2.5% on higher education graduates, people at universities. Any comments or observations in that regard? Because that is a huge change, and it needs to be properly communicated to your members so that they can gear up in their employment equity planning process, but also in terms of their skills development planning process. Any comments?
No, I don't have any.
All right, good. Okay, moving on. So the amendment makes specific provision for the employment or contracting of a skills development facilitator or a training manager. Companies can spend up to 15% of their 3.5% target on employing someone as a skills development facilitator or as a training manager. And the amendment introduces the concept that a stipend paid to a bursary recipient under 2.1.1.2 will constitute skills development expenditure, but it's silent on how much such a stipend should be and appears to leave it to the company's discretion. In 5.6, the amendment goes further to provide examples of legitimate training costs for bursaries, scholarships, which include fees, textbooks, and other learning material, and subsistence or accommodation costs during the period of study. Now, if any of you have got kids at university, you'll know that this mirrors the NSFAS grant, which is the National Financial Scheme for students. As you know, the organization which government regarded as compulsory to actually implement free university education. And these are the categories that NSFAS spends money on. So a company can spend at the moment up to 15% on employing a skills development facilitator or training manager, but it is not restricted to how much of the additional help it wants to give in terms of the stipend and help for bursaries, textbooks, learning materials, subsistence, accommodation costs, etc. So I think from a Corrisa's perspective, you need to make sure that companies don't, I suppose, abuse this opportunity. In other words, just give their total skills development expenditure amount to a university and then say we will include in that not just the bursary, but payment for all of these other things. Because that's not in the best interest of the industry or the sector. And that's something that you want to take care of. So, whereas at the moment, categories F and G of skills development expenditure make it very clear that expenditure on paying for someone to obtain a professional designation from a professional body can be set off as skills expenditure. In the proposed amendments, they're silent on that. Now, it has been indicated that their silence doesn't mean anything's been changed. It's still incorporated as F and G of the 7 categories for skills development expenditure. But what we are hoping is that there will be more clarity when the regulation is actually promulgated, ultimately. Additional observations. Well, as far as a scorecard is concerned, 9.1 is a table which sets out the weighting considerations for all 5 elements against which a measured entity is verified. In this table, a clear distinction is drawn between the ordinary points on offer and the bonus points. A total of 109 ordinary points are available for a company that wants to get to level 1, with an additional 9 points totaling 118. Those 9 points are bonus points. It is important to read and understand that all of the minimum targets which relate to ownership, skills development, enterprise, supplier development, and procurement relate to the ordinary points and not the bonus points. For companies which do more than 50 million Rand a year turnover, they have to meet 40% on ownership, on skills development, and on enterprise and supplier development and procurement. So that's one component. But for companies doing less than 50 million Rand but more than 10 million Rand, they have to meet their 40% on ownership and then either skills or procurement. So it's important to note that there's been no change in that regard. What has happened is the new regulations say that there are two more opportunities: joint ventures and startup businesses. The most important thing to note is that for 1 year, for the first year, a startup business will be regarded as an exempt micro enterprise, irrespective of its turnover. So it can be a startup business that's doing more than 10 million rand a year turnover, but it will still be regarded as a exempt business for the first year, which means that it simply then either needs an affidavit showing that it's got 51% or 100% black ownership, in which case it'll be a level 1 or a level 2, or just an affidavit saying that it does more than 10 million rand a year turnover, in which case it will be a level 4, except in the construction sector, because the construction codes say that an exempt business which doesn't have black ownership won't be a level 4 as in the generic codes, but in fact will be a level 5, which is specifically for the construction sector. Hendrik, I just want to ask you, have you had any interaction with the Construction Charter Council on the application of the Construction Charter Code for BBBEE verification for corrosion companies?
Not yet, I will.
Okay, I think that becomes a critical interaction for Corrisa.
I'll engage with them. I'll chat with them. I'll chat to them.
Okay, so if you and I could go see them, because I think what we want is an MOU with them that says we'll manage this on behalf of the corrosion companies that are our members, so that at least we bring those companies into a relationship with the Corrosion Charter Council, because eventually, if we've got a good relationship with them and we find that there are components of the 5 elements as they've been customized for construction which don't fit nicely with corrosion companies, they might agree to make exceptions through an MOU for corrosion companies if there's some kind of trade-off. So it's a discussion, I think, which is well worth pursuing with the Construction Charter Council.
Okay.
Good. I look forward to that. Hendrik, you and I can take this into a bilateral discussion and move forward, if that's all right with you.
Sure.
It is important to note that any training which is directed as licensing or practice training is excluded from being counted as skills spent for any of the 7 prescribed categories. So, practical example, if you need a safety certificate to work at height, the way this draft amendment looks at the moment, you will not be able to count what you pay for your employees to obtain that safety certificate because they've been trained. You won't be able to count that training or the cost of that safety certificate for this purpose. Now that's very bad, because it's bad in the sense that the majority of companies train their existing staff members in these practices, and they specifically count this as skills development expenditure. But the draft regulations take that out of the equation. They say you can't spend your 3.5% of payroll on these licensing requirement opportunities. So again, that is something that needs to be engaged with member companies sufficiently, so that your member companies understand that the moment these regulations are promulgated, they won't be able to count what they've traditionally been counting as skills development spend. They won't be able to count that in this regard. Any observations or questions?
Not from my side, Ivo.
All right, but guys, are you understanding how important this is?
Yes.
It can completely ruin your members' current BBBEE rating if they don't understand that the new BBBEE amendments actually ask them to reprioritize where they're spending their skills spend. I cannot emphasize it more clearly than that. All right. Any questions or any observations?
My suggestion, since you see a few people that actually are logging in, I suggest that the presentation, the minutes, as you go along, to distribute them as we did like the first one to the members. if they have questions, then they can raise them with us, and then we'll direct them.
All right. So, Hendrik, I'm going to say this. The second part of this presentation is about, yes, the Youth Employment Service regulations, which have been promulgated. But because of the number of participants, I would suggest that we leave the yes one till early December, if you think it's worthwhile holding a webinar in December, which gives us enough time for me to write an article on yes, and that you can then send to your members and then invite them to the webinar.
That would be great if we can send them through, like you say, send the article, let them read it through, and then if they have questions, then I'll get them. I'll communicate more to them that they must attend this webinar actually.
Now, can I just ask again? Do you think it should be in December, or do you think we should wait until January for that?
I think let's make it the December, first week of December.
Because we'll record it like today's, and then you can send it out to them afterwards.
Yes.
And
first week of December.
Again in January if it's necessary.
Yeah, we can do that.
Okay.
Look, I'll get Nomganyiso to get RSVPs and see on the number of RSVPs, and then based on that, we can either hold it in December or January.
Okay, fantastic. All right. Any other questions on today's presentation, ladies and gentlemen?
No, I'm fine, thank you.
All right. Linda, do you see the opportunities here with your existing responsibilities for actually convincing members to utilize their skills development expenditure for this benefit?
Yes, definitely.
All right. Guys, thank you so much, and thank you for participating, and I will send you a copy then of this presentation and also of the recording.
Ivan?
Thank you, Abel.
Sorry, who's that?
Ivan?
Yeah.
So, Ivan, it's Leslie speaking. So, I'd just like to maybe suggest, don't you want to consider scheduling like a test meeting where people can check whether they can actually connect and check the sound and things like that? My perception would be that people are not fully comfortable with joining a meeting like this because they're just uncertain about their technology. I know for me it was like, I thought, well, just what the hell, let's give it a shot, see if it works. But I had struggled with the previous meeting, and I actually left the meeting after a few minutes because I couldn't get sound. Okay. This time I managed to get it going, but I think it is a challenge for actual participation.
All right. So, Leslie, can I say this to you then? What we'll do is, for argument's sake, the date in December is the 10th, just for argument's sake. What we'll do is, for the second or the third, we'll schedule a 5-minute test call just to make people can link up, and then to invite them to the meeting on the 10th. I think that's a very good suggestion.
Great, sir.
Thank you so much. Could you hear today's presentation?
Yes, sir. The first bit, maybe 5 minutes or so, I didn't, because I tried to do it through the website. But I then noticed after a while that they've got an option where you can click to download the desktop app, and I did that and immediately got sound.
Okay, lovely. Thank you so much, and thank you everybody for participating.
Thanks, everyone.
Thanks, guys.
Thank you, Abba.
Bye-bye.
Goodbye.